Singapore stocks have been happening quite lately, and today we have a STI component stock, a blue chip stock called Hongkong Land, with its share price going up more than 14% in one day. Hi, I'm Alvin from Dr. Wealth. In this video, I'm going to explain to you what's driving the share price and whether this is an investment opportunity for you. So first of all, the reason why the share price is going up is because the management released the strategy update where it lays out the plan until 2035. Before we go into the details, the first thing to ask is also why is there suddenly a strategy update? Okay, it's got to do with the lackluster performance for Hongkong Land over the past 10 years. So imagine this, Hongkong Land has been giving good dividends. The current dividend yield is like more than 5%. You collected these dividends over the span of 10 years. You hold a stock for that 10-year period, and imagine you still end up with a loss of 3.85% holding the stock and collecting all dividends inclusive, you still end up with a loss. Even the die-hard buy and hold investors would have been very disappointed with the kind of performance. And if you compare to the book value of the company, which is $13.82, which is also appropriate because Hongkong Land is a property company, and the share price have never crossed $6 in the past 10 years. That means that the stock is perpetually selling below the valuation of the properties that Hongkong Land has. And that is something that is very illogical, right? It doesn't really happen in the real physical property world, but it happens in the stock market. And this is why a strategy update is needed to really get investors as excited about Hongkong Land again. So now let's break down what are they going to do. By 2035, they set out 4 main goals. Okay, so the first is to double the underlying profit before interest and tax. Second is double dividends per share. And third is to grow the asset under management to 100 billion. Now they are about 40 billion. And also actively recycle capital up to $10 billion. And the most important talking point is actually number 4, actively recycle capital up to $10 billion. Because the first 3 are the function of growing. But in order for them to grow, they need to get some of this funding. And the funding will come from recycling their assets that they currently have. So that's the talking point that we're going to focus on, right? If they don't do number 4, the first 3 will not happen, okay? So the first thing is that how are they going to raise the money? One is that they decided to exit the build-to-sell segment. These are your residential properties where a property developer will buy land, build the houses, and eventually sell them to end buyers. So this is the build-to-sell segment. And they decided to exit it altogether. And that would mean that selling away some of the subsidiaries or joint ventures. One subsidiary is MCL, which does a lot of property development in Singapore. But it's not just in Singapore. Hongkong Land has property development projects all around Asia. China, Philippines, Malaysia, you name it. Okay, so they have a lot of projects, and they are going to exit this business, and it will raise about $6 billion. Why would they want to exit this segment, right? So my view is that because it is not a very recurring business, because it's very lumpy, you build and sell, you need to buy new land again, and the process goes on. And you don't get the revenue in chunks, depending on the phases of the project completion. It is not like investment property where you collect the rental on a monthly basis. It's a lot more predictable. And also there are property measures. We saw that in China, right? So Hongkong Land was quite hit by the downturn in the property market in China. So there are a lot of all these inherent risks when it comes to development projects, as well as even the market cycles, right? Property has boom and bust, and they can last for many years. And no one knows how long the China property market is going to recover. And because of all these risks, investors are also discounting the value of these development properties. And therefore, you can find quite a number of developer stocks trading a very steep discount to their value. And I can see the parallel and similarities of what CapitaLand tried to do a few years ago, right? If you recall, CapitaLand split into 2 arms. One is the development arm and one is the investment arm. So CapitaLand Investment end up being the existing listed entity, while the development arm is taken private. So you can see that investors tend to favor the investment side rather than development, like because of the risk that I mentioned just now, and hence the investment arm would usually be valued better by the market as compared to the development side. So we can see that's what Hongkong Land is trying to do over here. And the next part of that capital recycling, right, is going to come from converting some of this investment property or injecting them into a REIT. And it is also mentioned that it's one of the options, right? And this REIT, if ever is being spun off, is going to be a REIT that's managed by Hongkong Land. Okay? It's not going to be something that they're going to sell away the properties and they wash their hands over it, right? They still have the goal of building that AUM to $100 billion. You would need all these assets. So typically what all these property sponsors do is that they will sell percentage, right? They will not sell 100% of the properties. They will sell a percentage, maybe 20, 30%, or even 40% of the property to the REIT, and they will still retain control. And they will also appoint a management team to run the REIT on a daily basis. Okay, so that is the strategy that they have laid out. And if we look at the investment property portfolio, is worth about $35.97 billion as of 31st December 2023. And it's a long list. Most importantly, it includes the heart of the Hong Kong CBD. It's probably the most expensive real estate in the world at the Hong Kong and Central MTR stations. Okay, so these are very coveted locations, and probably most of the property value will come from here. And they're just intending to raise about $4 billion, okay, from this investment property. So I think it's very unlikely that they will package all these properties into one REIT, okay, because this is like the crown jewel that Hongkong Land has. It is possible that they may take out part of it. Maybe the Exchange Square, there are 3 towers, there's a podium, there's shops there, right? So that may be one option, to carve out part of the Hong Kong CBD area to a REIT. And if you look at the Singapore properties, they also have some price asset like MBFC, One Raffles Quay, and they also have a One Raffles Link. The only issue is that One Raffles Quay and MBFC, they only own 33%. So due to the stake that's already lowered, I don't think they are going to inject these properties into a REIT. And there are also other partners like Keppel REIT, Suntec REIT, and DBS, who also co-own MBFC, and they will need their agreement for this property or this part of the property to be injected. So I think it's very, very unlikely. One Raffles Link is possible because it's 100% owned, and the other 100% owned property would be Exchange Square in Phnom Penh. And for this, these two properties, they are not huge and they may not be able to garner that kind of attractiveness to investors. So I would say that eventually they will still need to pair up with 1 or 2 properties from the core Hong Kong CBD in order to make this REIT more appealing to investors. If we look at the rest of the property in Beijing, Macau, Jakarta, and Bangkok, again, these are not 100% owned. Okay, so it becomes a bit tricky for them to inject into the REIT. So their options are not a lot, right? So they do need to consider taking some of this crown jewel in Hong Kong CBD area and inject them into a REIT. So again, there are parallels and similarities with CapitaLand approach. Okay, CapitaLand has a lot of REITs, you can see in the screen here, and at the same time, CapitaLand continue to manage these REITs and collect management fees on a yearly basis. So CapitaLand investment still have stakes from between 18% and 41% in the respective REITs that CapitaLand is managing. And so this is how they can sell the properties into a REIT, at the same time don't lose control, and they get some of the capital returning to the mother company or the sponsor, which they can use to invest in more properties. Okay, so this is the recycling of capital that Hongkong Land is talking about. And indeed, CapitaLand is almost like a direction that Hongkong Land is trying to move towards. If we take a look at the 30 June 2024 CapitaLand numbers, CapitaLand has an asset under management totaling $134 billion in Singapore dollars. So you convert that to US dollar, is really about $100 billion. Okay, so somehow it seems like, whether is it deliberate or it's just coincidence, Hongkong Land seems to be moving towards the CapitaLand model, and for all we know, maybe that is what they have been modeling during their strategy update. Okay, and it may not be a bad thing, because if we take a look at how the valuation of these two companies are today, right? So CapitaLand investment is trading at 1 times its book value, while Hongkong Land is trading at 0.3 times its book value. So there is this valuation gap where Hongkong Land is today and the future Hongkong Land it wants to be. So hopefully, really indeed, that this Hongkong Land managed to execute well, right? Recycle the capital, inject into a REIT, dump off the development arm, become more like an asset management company. So I believe that the valuation of Hongkong Land would improve over time. Just don't expect that it happen overnight, because this is a 10-year plan and it will take years for some of this initiative to be realized. Okay, so I do think that there is opportunity, and it's at least is a good step that they realize that really the value need to be unlocked in Hongkong Land. They do have good properties, but they need to do something about it. Otherwise, it becomes a value trap. Forever the stock is undervalued, forever investors are discounting it because there's just nothing happening that can help Hongkong Land grow or aspire to be something, right? But now we have a mole, and it seems like really Hongkong Land is moving the capital land direction, and hopefully the valuation also move towards what capital land investment is garnering right now. Hopefully you have a better idea what's going on with Hongkong Land, and share with me, right, whether you think Hongkong Land is an investment opportunity for you or no. Put them in the comments below. Thank you for watching. Give me a thumbs up, subscribe to the channel, and I'll see you in the next one. Goodbye.